Good morning, ladies and gentlemen. This is Greg Michalowski from FXDD, and this is the Wednesday, March 17th, 2010 New York Opening Forex Report. Happy St. Patrick's Day to those out there celebrating today. Overnight, the Bank of Japan eased their policy, but it was via a split vote. What they did is they doubled to 20 trillion yen the funds available to banks for 3-month loans at the policy rate of 0.1%. This was pretty much as expected. They're expecting to have some sort of easing condition. The stronger yen that we've seen here versus the U.S. dollar versus other currency pairs, it is a risk to deflation. They need to stimulate growth, try to keep the economy going, try to keep deflation away from occurring in that country. And so the policy action was intended to do that. Normally, you'd see when they ease credit conditions that your currency gets weaker, that has some inflationary impacts, or at least it stimulates that side of the equation. And you can see here that the dollar versus yen, although we went down, tested again the low, the moving average low here at the on the daily chart at the 09 level here today. The market has not really moved that far off of that level. Current price is trading at 90.49, continues to remain in this fairly narrow range here that we've seen off the daily chart since we moved back above the 100-day moving average. The good thing is that we remained above, or we remain above the moving average. The next resistance level may be up here against a 200-day moving average. You can see here that we've went to test it once and twice, and this would be the third time up to that level. Should we get some momentum to the upside? Let's go to the hourly chart and the 5-minute chart to see how we stand in that respect, and you can see how the market originally went down, tested that. We're going to move this down to 90.09. That's a 100-day moving average. The market went to a low here of 90.02, and then it started to bounce back higher, getting through the 200, getting through the 100-hour moving average. We're kind of just having the 100-hour moving average go sideways, and the price is caught in between these highs here that we saw from yesterday, the high for the week, which actually occurred in the first hour of trading on Sunday evening, is going to be other resistance up here at the 90.84ish type area. So it's a tough sledding here. We are right at the 100-hour moving average at 90.50. That's where exactly the price is trading. So we'll just have to see if the market gains any sort of momentum to the upside. Taking a look at the 5-minute chart, we're also at the 100 bar moving average on the 5-minute chart, 90.49. So there is some support here. You can see how the market, this is the initial sell-off through that 100 and the 200. We broke back above. Once we broke above, we started to come down. We used the confirming moving average, could not get through this area right here, and we moved back higher, but we're back down testing these. The 100-bar moving average may have additional support against the 200-bar moving average. These are 200-bar simple moving averages on these charts. Let's go to the pound sterling, because in the UK here today we did get much better data from an employment standpoint. The claimant count actually declined by 32,300 jobs. This was much better than expectations. They're expecting another increase of people claiming unemployment by 6,000. This is and the prior month was also revised down to 5.3. So it was a much stronger employment report, and this has led to the rise in the sterling versus U.S. dollar. And as often happens in these days, we're seeing the rise and then the correction here into the New York as the market runs out of steam. The an upside resistance off of this daily chart comes in at 154.21. This is the 38.2% retracement of this last move down. This is a January 2010 high to the low, so the 2010 range has a 38.2% retracement of 154.21. We'll be looking for that on a longer term perspective to the top side, but let's go to the hourly chart, see where we stand in respect to that. And if we take the last move down, this is after this consolidation phase, moved down from this high at 158.14 to the low here at 147.82. We broke through the midpoint of that range at the 152.98 level. The next target on the top side, 154.21 for that off this hourly chart. We did find this support here overnight against this 152.06 area here. That's just prior to the release of the unemployment situation. That corresponds with these highs right here. I'll zoom in there to give you a better look of that, and that proved to be a nice buying opportunity through the number as the market rallied strongly off of this support level after the number came out. It was really up rather strongly before you could do anything in the sterling versus U.S. dollar off of that such a strong economic number. But all this started yesterday when the market failed on this move to the downside here off of that Moody's report, I guess, in the market. The two moving averages and the price converged, and it started this bullish wave to the upside, and that continued here today with a little break from the economic data. So sterling versus U.S. dollar is looking more bullish as well. Let's take a look at the dollar Canada because we made new lows in the dollar Canada as we head into their trading session here. The lows for the day came in at the 101.07 area for that current price, and it just continues to be pressured down here as the commodities continue to move up. If we take a look at the hourly chart and we connect these lows here, we are coming down toward a support level at the 101.01 level. That's where this trend line dissects or comes into play here. So we'll be watching the support at the 101 level. Maybe that's something to lean against for those looking to buy a dip in the dollar Canada. That's further support at par 77, and then the parity level seems to be the attraction for the dollar Canada. Come this far, might as well go all the way, I guess, as the thought. But nevertheless, that doesn't necessarily always happen. So that we're going to be looking for support against the 101.01 level here this morning in that currency pair. Also seeing Aussie dollar move higher here today, broke above the 100 and the 200 yesterday after checking the 200 bar moving average here. Could not get through that. Moved back above the 100 hour and started its move back to the upside for that currency pair. And the dollar Swiss is down here back testing the 200-day moving average. That 200-day moving average currently comes in at the 104.93 level. The price got down to 105.12, so we're getting to a close towards support here against the 200. Actually, the 200 comes in at 104.91, so we're looking for support against 104.91, and we have seen a bounce off of that level with the current price trading at 105.25. So that's our morning report here. I wish everybody best luck in their trading. If you have any questions, send them to greg@fxdd.com. We'll talk to you later. Bye-bye now.